Good evening. I want to welcome you to this session, and our topic today is accounting for credit sales and purchases. Okay, so thank you, Doreen. Welcome to you, Doreen, and welcome to you, Max. Okay, we are still expecting a few more students. Okay, but in the meantime, we'll get started. If you need to ask any questions, you know, at the top of the menu, there's a person with a hand raised. If you click on that, I'll be able to see that, and I can let you speak if you have a microphone. Otherwise, you can just type into the chat box at the bottom, and basically I can also reply to you. So if you have any questions, please let me know that, and I'll be happy to answer any question. Thank you very much. Our aim today is fourfold: to be able to prepare and close up day books, to understand how to post entries from day books to the general ledger, to understand how to post entries from day books to the subsidiary ledger, and finally, to understand how subsidiary ledgers are linked to control accounts. Okay, thank you very much. Great. Now, before we proceed, I'd like to give an overview of the accounting system. Those of you who were, who basically were part of the previous lecture, we did an overview of the accounting system. I think the last two lectures, the first one, and over here you can see the 5 stages of the accounting system, and we say that it starts from the financial transactions, and we basically have an evidence of what we call a financial document out of every transaction. Now, this document will first be recorded in the accounts in the books of prime entry. Okay, so that's quite important. The document can be various, can be any purchase invoice or sales invoice, but we do first record that in the book of prime entry. So today we're going to have a look at 2 books of prime entry. Then eventually we'll post to the ledger using the principles of double entry. Okay, and finally we will extract a trial balance. Okay, so today we're going to be working from here, books of prime entry to the ledger accounts. Right, so that's a brief overview for you of the accounting system. Now, the first area we're going to look at is the basically the sales area, which is credit sales. How do we record credit sales in the accounts? Okay, I've put the kind of the process here for you. Firstly, the transaction is called credit sales, and the financial document that we generate when we sell on credit is a sales invoice. Okay, and this sales invoice is recorded in in the book of prime entry, which is called the sales day book. Okay, there is a second book of prime entry, which is called the sales returns day book, and actually that is where a customer returns goods back to us. Actually, that will also require a different financial document, which is called a credit note. Okay. Then once we've recorded in the sales day book, the sales returns day book, we will post from the books of prime entry into the ledger using the principles of double entry. Okay, so let's have a look at a detailed look at an example here. Now, in this activity here, we have about 5 of them summarized here. On the 2nd of April, we sold goods on credit. These are all credit sales to Marvin stores, and for £55 plus VAT. And I've shown how that will be recorded in the sales day book here for you. You can see that on the 2nd of April, we have here Marvin stores. The invoice number is given to you here. Now, the amount of the invoice is £55, and we need to calculate VAT, and that VAT is shown here. That is 20% of 55. That is £11. So we add 11 to the 55 to get a total. So in the sales day book, we have a column for the net amount, which is the amount before VAT. Then we will add on top of that our VAT calculation. Then we'll add the net plus the VAT will give you the total. Okay, and the total amount is what the customer owes us. Great. So you can see how these are recorded. The second one says sold goods to Pershaw 65 plus VAT. So that is also shown here. The third one is sold goods to Granger. Okay, and that is shown here as well. Now, the fourth one is actually a return. So we're going to leave that. We're going to record that in the sales returns day book. But the first three items relates to the sales day book. And basically, this is how we will prepare the sales day book. At the end of the period, which is the end of the month, we will basically close up the book by doing a total of the net column, doing a total of the VAT column, and a total of the total column. Now, please note that when we add the net to the VAT, that gives us the total. Okay, the net represents our sales, our revenue before VAT. Then the VAT column represents the VAT we have calculated on the net amount. It's not our money, it's the government's money. The total is what the customer owes us. Okay, so that is how we illustrate this in the sales day book. Let's look at the sales return day book. In the last two transactions, we can see on the 8th of April, Pershaw retailers returned goods of £20 plus VAT to us. And that will be recorded in the sales returns day book here. We can see Pershaw, and the net amount is £20. VAT on that will be 4. The total that we basically owe the customer, we need to refund is £24. Okay. E. Granger returns goods of £28 plus VAT, and that is also recorded here. At the end of the period, we do the same thing. You need to total up your day book, the net column, the VAT column, and the total. Please note, net plus VAT is equals to the total. Okay, great. Is there any question at this stage? Any question? If you have a question. Okay, great, wonderful. Thank you. Let us have a look at the next stage of the process. Now, after we've done our books of prime entry, we basically need to post to the ledger. Now, when we are posting to the ledger, that is where we need to use the principles of double entry. Okay, and there are 3 types of ledgers that you should know about. The first one is the general ledger, okay, which is the main ledger. It contains our assets, liabilities, capital, income, and expenses. So accounts, different types of accounts in the general ledger. And I've shown some examples here: your bank account, your debtors account, your creditors account, your rent account. Those are accounts that we use to prepare financial statements. They are all in the general ledger or the main ledger. Now, beside that, we have 2 other ledgers, and one of them is called a sales ledger, and the other one is called the purchases ledger. Now, the sales ledger is actually the ledger in which we keep customers' accounts. Okay, and purchases ledger is a ledger in which we keep suppliers' accounts. Okay, so the general ledger contains our assets, accounts for assets, liabilities, capital, and all other accounts that we need to prepare our financial statement. Sales ledger is for customers only, accounts for individual customers. Purchases ledger contains accounts for what? Suppliers. So let's note that as we go to the next section. Okay. Now, in the general ledger, there is an account that we call control account, and I just want to explain this a little bit to you. A control account is an account held in the general ledger which summarizes the balance of all the accounts in the subsidiary ledger. Okay, so if we go back to the previous page, a control account will be here. And these two ledgers are called subsidiary ledgers. It means they are smaller ledgers. This is a main ledger, and these are smaller ledgers, subsidiary ledgers. Okay, so sometimes you will find an account here which has a link to certain accounts here. Okay, so that is what we are talking about. Okay, so if we go back to the control accounts, I'll give you an example. For instance, when we are dealing with customers or debtors, we usually open an account for debtors in the general ledger, and that is called a debtors account. Okay, and you know that our debtors account is a debit account. Anytime we sell goods on credit to customers, we need to open a debtors account in the general ledger, and that is a debit account because it is an asset. Okay, but we only have to post totals to this account. Okay, and here you can see that we have a debit here as £1,000. However, we don't know who owes us this £1,000. So what we tend to do is we tend to open a subsidiary ledger called a sales ledger, which is a customer's ledger. And in this ledger, we will open individual accounts for those customers who owe us £1,000. So we can see that we have the breakdown here. One of them is called Marvin Stores. Marvin Stores owes us £500. Pershaw owes us £200. And Granger owes us $300. And when I add 500 plus 200 plus 300, that will give me £1,000. So this £1,000 basically is explained down here. So the control account is the total account that sits in the general ledger, and the individual account that makes up a control account sits in the sales ledger. Okay, so that is why we call the customer's account the sales ledger control account. Okay, we'll have a look in a bit. Let's use just the principle that we just learned to demonstrate this, how this control account works. Okay, now we just completed a sales day book, as you can see here. Now we're going to try and post this into the general ledger and into the sales ledger, and we'll see how the control account will be demonstrated over there. Now, this is this sales day book. Now, when we are posting this at the end of the period, what we need to do is to basically post these three columns: column total, VAT, and net. Now, each of these columns represent an account in the general ledger. So first of all, what we need to do is we post the totals to the general ledger, which is demonstrated here. So we will debit the sales ledger control with the total. Now the sales ledger control is the same as the debtors account. Okay, it's a customer's account.